This is silver priced in US dollars on the monthly scale. Silver is rising, silver is strong, following gold, but silver is getting to a point on the monthly. As you can see here, there is a very powerful overhead resistance. This is marked by the black line, and I'm going to open it a bit. You will see from close what I'm talking about. Do you see? We're coming up. It's a very powerful advance, but look what happened here. We're talking about many months. I mean, there is a zone of resistance here that is between 17.5 to 18 that kept the market down. You can see, kept the market down for almost 2 years. Almost 2 years. They couldn't really rise above this zone. All the attempts, of silver, it couldn't really rise. So I think that it is just sensible to assume that, given that we are reaching this zone, in addition to the likelihood that we have internal subdivisions in the advance itself that are calling for a pause, I think when you put all these things together, I think it is time to look for the possibility of sideways price action or some correction. And as you can see on my internal subdivisions here with these colors, you see the move color, we are looking for a fourth wave to emerge. I think that the movement in silver is very strong. I do not think that we're going to have the bear suddenly showing up and wiping out all this effort that we have seen here on the weekly. But on the other hand, I think it is just sensible, as I said, to prepare for a possibility of sideways price action for could be easily quite a few weeks, if not a few months. Okay, so we have here 1-2 on the weekly. The reading that I adopt at this point, that's a 1-2, that's a 3-4, and that's the fifth. The fifth is relating to what you see here on the weekly. We had a fantastic week, a surge. I think it is likely to continue, but the big question is, of course, how this is going to morph as we are reaching towards the strong overhead resistance here. And what I'm trying to say is that you need to prepare for this. Okay, might not be the most exciting market, with this being 1, 2, 3, 4. If it is anything else which is much more bullish, then of course you're not going to have this. What will happen? There is a reading here that I don't embrace at this point, and you can see it. That's a 1-2, meaning we go with a 1-2, 1-2, and a third wave. Yes, 3 of 3, which will see silver just flying, running up sharply. If silver manages to run through 18 without too much trouble, that is clearly the right wave count. Yes, that will be on the daily 1-2, 1-2, and up we go. But right now, I favor taking this as a 1-2-3. I think that's a fourth wave. And as you can see here, the last 2 trading days, it's been tracing a triangle. If I go to the 60 minutes, this is clearly a triangle. And this is clearly telling us there is another push coming above, let me show you here, above this level. Okay, above 1725. This is clearly a triangle as far as I'm concerned. Might not need a lot of more wiggles here, not really many to complete. It looks to me like it could be actually complete, so that's my expectation. But once we get that short, your job is to be on alert. If you're trading very short term, yes, you're trading very short term, I definitely advise you to put, once it runs above this level, put a stop here. Put a stop here, 1695, okay, or just run with trading stops. Okay, as you can see, I have 2 4s here. Which one is the one? Well, I think we have to leave it to Mr. Market to tell us. We don't want to impose an opinion when the market is not, when the structure is not terribly clear, it's good to work with two alternatives, and as we get more price data to go by, it will become, of course, clearer. So that is the short-term expectation, and I warned you of a possibility of a correction. So if you are, in luck, you have some nice profits here, it is time to protect them. Now this is gold on the monthly. Gold is absolutely strong. There is no question. After this huge breakout, yes, huge breakout, very important breakout. It is not letting go. The bull is still there with full force. And you remember we worked with the idea of potential A, B, C. And that will morph into a big A. That will be a B. It'll come down as a C. As I told you, I think in previous videos, it is not out of question, but it doesn't look like it's for now. It doesn't look like this surge has done, meaning gave what it had to give. No, I think there is much more coming. So while this option might still be alive, if you like, in terms of an alternative, as long as we don't exceed seriously the previous high, right now, as I said, I don't think that it's around the corner, this huge reversal. However, I have to work here with the possibility that we could be reaching also here a point where we're going to go for a correction. Okay, that's the weekly, and I'm going to go to the daily, and you will see that I have alternatives here that I consider. This is ultra bullish setup. This setup says the rally that began from here terminated. We had a 1, 2, 1, 2, 3, 4, 3, 4, 5. That's 1. That's 2. In fact, gold now is in the third wave, meaning the rally is not about stopping for weeks and weeks or months. No, the rally will continue apace here. Short term, I have reasonably high confidence reading that we have terminated the fourth wave on Friday, or nearly terminated here on the daily scale, and there should be at least one push higher here, something of $20–30 from current levels. It is only then that the danger could surface, and the danger is that in fact it will terminate an entire wave that started right here. You see, it could terminate here. That would open the gate for a correction that could send gold down back to 1,420, maybe even lower. Okay, so you would say, what should we do? Well, I'm targeting the very short-term traders, because long-term traders, the guys who are trading the long-term, I think these tiny fluctuations is not going to be a reason for them to suddenly run away from their positions and look for re-entry. I think that they are probably reading the market off at least the daily, if not the weekly scale. For those who are trading short-term, of course, it's everything. Wow, what if this is a 1, 2, 1, 2, 3, 4, 3, 4, 5, and we are trading off the 60-minute scale or the 15-minute scale, and it shoots up? That could make our day. Look, that is 1,400. That is 1,450. This is $5,000 per contract. $5,000 per contract, one day. That's a fantastic return. So you definitely don't want to give this back. Yeah. So for those who are trading short term, I'm here to tell you that gold staying above 1,490, staging really serious rally here over 1 or 2 trading days, your job is to take your profits. If you are reluctant to part ways with your contract that was so good to you, and this is often a psychological trap, if you feel like that, then I urge you to work with trailing stops. Okay, work with trailing stops, or just raise your stop. Make sure you are not going to give back all these gains. Yes, and you're not going to fall asleep and see it coming down here, and then before you know it, boom, boom. And what happened to your nice profits turned into an absolute nightmare. Okay, so this is a high confidence reading for very short term. After that, if the market stays above 1490, it goes sideways, that's an indication that probably this wave count is correct. That this is 1, 2, and that's going to turn into 1. You understand? You'll have a 1, 2, that'll be 1, that will mean a few days of going sideways and then pushing even higher.